proof of stake tokens are backed by nothing, which is why FTT could be printed into the $8 billion zone. And this is simply a very expensive lesson for the crypto ecosystem and the difference between crypto and Bitcoin.
Hello and welcome back to Cryptollennium. Today we'll focus a bit on Bitcoin, touch base on what's happening with the supply, and analyze some of the most useful charts that one can use to help navigate this bear market. So without further ado, please like and subscribe and let's dig in. As we can see, Bitcoin is relatively unchanged from yesterday. But what's going on behind the scenes? Well, just in, over 150,000 Bitcoin were taken off exchanges in the last 2 weeks. As you can see in this summary of a chart, quite a chunk taken out. So, you might wonder why this is. Well, let's take a look at what CEO of MicroStrategy had to say about this phenomenon.
Crypto and Bitcoin.
Michael, we've just recently seen Bitcoin come off of its 52-week low, but it's also winter low in terms of the price action here. And so with that in mind, do you believe that crypto whales are looking at the price right now and still seeing some type of opportunity? And what type of concentration among Bitcoin ownership do you think, even at these lows, which are still amid a washout in some of the confidence for other investors in crypto, what does that mean in terms of the concentration of ownership going forward?
I think it's another event that's massively distributing more Bitcoin all around the world. I think there's a massive amount of accumulation of Bitcoin right now. The BTC is moving from weak hands to strong hands. I think this is one of those annealing events. 2.5 years ago, in March of 2020, we saw a similar circumstance with Bitcoin trading in the $4,000 range. If you look at the volumes of Bitcoin trading today versus then, they're up by a factor of 5 to 10x. So there's extraordinary institutional interest and investor interest in the asset class. And I think that this is going to be really helpful for Bitcoin because this is an educational moment and people are realizing the benefits of buying a crypto asset that's backed by the world's most powerful computing network and by 10 gigawatts of energy. And the difference between that and the 20,000 other cryptos that are in essence backed by nothing, and they're just like other fiat currencies.
Moving on to some technical analytics. We'll take a brief look at the following charts to help paint a better picture of where we're at in this crypto winter. So an awesome chart that I like to look at is the 2-year moving average multiplier. A summary of this one is it's basically used as a long-term investment tool. People use it to highlight periods where buying and selling Bitcoin during those times would have produced outsized returns. And so to do this, it uses a moving average line, the MA line, 2-year moving average, and also a multiplication of what that moving average line, 2-year MA times 5. Note that the 5x multiplication is of the price values of the 2-year moving average, not of its time period. Buying Bitcoin when the price dips below the 2-year moving average, the green line, has historically generated outsized returns. Selling Bitcoin when the price goes above the 2-year moving average, the times 5 pretty much, has been historically effective for taking profit. Now, as you can see, we barely even grazed it this last cycle, and that's probably due to the law of diminishing returns in logarithmic terms. So this will have to be adjusted. This chart may be obsolete in the next few years, but I figured it would be interesting to show just where we're at compared to other bear markets. We're pretty deep in the accumulation phase, according to what this chart has been sized for, which is wild to me because, I haven't taken a look at this in weeks. And so to see this, it makes you kind of want to, think about possibly accumulating. Moving on, we'll look at the MVRV score. So for anybody who's really into stats, this one is historically effective in identifying periods where market value is moving unusually high above realized value. These periods are highlighted by the Z-score, which is the red line up here. As you can see, entering the pink box and indicates the top of market cycles. So it has been able to pick up the high market high of each cycle within 2 weeks or so. It also shows when market value is far below realized value, and that's the highlighted Z-score entering the green box down here. So buying Bitcoin during these periods has historically produced outsized returns as well. And as you can see, we are deep in the green box. Like, some say don't bet the barn on crypto or Bitcoin. But if you were to, this would be a safer place to do it. And again, this is not financial advice, but as you can see, quite deep of a dip we're in. And I want to keep in mind, and I want you to consider this as well as you watch these charts. Bitcoin has not seen the state of the economy in this type of disarray ever in its life. Bitcoin is just a teenager at this point and has not lived through a recession like 2008, the dot-com bubble, or anything before that. So keep that in mind, because these charts may become obsolete if Bitcoin behaves in a completely new way, since the environment is presenting a completely new challenge that we have yet to put on these charts. Yes, you can compare stocks, but you don't really know until you know, So moving on, Bitcoin logarithmic growth curves. Again, charts like this do need to be resized as we move forward. As you can see, we are really, really far off of this. So when I see this and I think of it being resized, I would assume that the fair value of Bitcoin being over $100,000 may become hindered because of how deep of a dip we're in, how big the bubble really was, and the Fed trying to rake in all the money that they printed in the last 2 years, 40% more printed. So a little bit of a summary on this one. It kind of speaks for itself, the logarithmic growth curve. But assuming Bitcoin continues to be adopted over time, this chart can be used as a price prediction tool where there's a potential for there to be resistance in the upper boundary and support in the lower boundary. The price levels of these boundaries can be seen by hovering over them, as we can see here. And because the curves can be calculated on a forward-looking basis, it is possible to forecast where the price of Bitcoin may move towards in the future. Although it'll be better once this is resized if it is not already, and I don't know if it is, so we'll move on. Lastly, I just want to finish up with this chart. This is kind of a classic fear and greed index, and the reason we look at this one is from a sentiment perspective. It identifies the extent to which the market is becoming overly fearful or overly greedy, hence why it's called the fear and greed index. A lot of people say buy when there's fear in the streets and sell when there's greed. You could say that it's safe to say there's a lot of fear in the streets, but there has been fear quite a bit in this last year. So keep that in mind. It doesn't really look that much like the previous bear markets, and that's because it's not. And this isn't to discourage you, but it's more to encourage you, to allow you to realize that you probably have a lot more time to accumulate and become a whole coiner or a multi-coiner based on where we're going. We're going into a deep recession, possibly, and we may not have seen the last leg on Bitcoin, possibly Q1, maybe even later of 2023. And so with this one, kind of encouraging to see that if you were to dollar cost average, you're doing it from an extremely low sentiment perspective, as you should. So thanks for tuning in to this video. This is Cryptollennium. If you haven't already, please like and subscribe. We'll see you on tomorrow's video. I hope everyone is well out there. Take care.